So when a traditional capitalist plans to invest in an opportunity or considers investing in an opportunity, he or she may predict a range of possible outcomes and assign a probability to each of those outcomes. To what extent do you do the same thing when looking to invest in invest in a company or make a grant to a nonprofit, and how feasible is doing such a thing?
Well, I think that it's, I don't know if I would use the word easier, but it's being a traditional investor, as you would use the word, you're being measured by a financial return. And it's fairly easy to measure the financial return. If you're investing in a company, what is the profitability of the company? If the company, if you invest at a certain level and then you exit at a certain level, what was your return on capital? That's been done for thousands of years. Impact investing is new because people used to make grants and then they would make investments, and it's only been recently that we put it together. And it's complicated because you can look at the financial return, but that's not why you're making the investment. You're making the investment because of the impact as well. And I would say that we probably do the same due diligence and rigor on a pure financial investment that we do on an impact investment from the financial side, because it needs to work financially. You have to make a set of assumptions, and you hope that you're going to be within that range of assumptions from a financial return. On the impact side, again, this is kind of a new area, and there's all these different forms of measurement. I would say on that part, we are less measurement focused, so that we look when we're making investments, and again, this is really coming from our foundation that's making impact investments, and I need to differentiate that from Mission Point, which is a firm that is focused on financial returns but making investments in a world of clean energy. In our foundation, we are making investments and we are looking at a financial return, but we also are looking to make an impact. The impact that we like to make is really being a catalyst. So the way we would measure the impact would be, if we made an investment, did other people make an investment afterwards? Did we actually test out a innovative business model? Was there a gap in the investment infrastructure of some sort that we plugged the gap with our small investment, and as a result of that, we proved out a model, and other people came behind us and made a similar investment? That's the way we measure it. If we were successful, other people are coming into the market, larger dollars are coming into the market, and eventually the risks that might have been associated with the investment we made will have gone down because everybody will have proved out the risks. And once the risks go down, there's a lot of capital that can come into the market. People want to come in, they have a different risk profile than a small family foundation.